Hey everyone, welcome back to Corporate Decoder. Today we are diving into CenterPoint Energy's latest filing. It's not about explosions, but it is about some money moves they are planning. It is a peek under the hood of how they manage their debt and what it might mean for the company's future. This report is dated April 2025, so it is fairly recent. CenterPoint Energy, along with its subsidiary CenterPoint Energy Resources Corp, have both filed this report. The main takeaway, they're making moves to handle their debt. The big news here is that CenterPoint Energy has announced it is starting what are called tender offers. Think of it as the company trying to buy back some of its own debt, specifically some of its senior notes, which are like IOUs the company issued to investors. Okay, so what are these tender offers all about? Basically, CenterPoint Energy wants to buy back some of its older debts, retiring them. There are actually two different offers. The first one is to buy back up to $600 million worth of certain CenterPoint Energy notes. The second offer is to buy back up to $400 million of notes issued by their subsidiary, CenterPoint Energy Resources Corp. These are called the CERC notes. The CenterPoint Energy notes include several different series of notes maturing in the years 2026, 2028, 2029, 2030, 2031, and 2049. Basically, these notes have different interest rates and maturity dates. A bond maturing in 2049 is considered very far. It means they got the money a while ago. The CERC notes also have a few maturity dates, including 2028, 2032, 2034, and 2047. So the company is trying to reduce its overall debt by buying back these notes. Where is the company getting the cash? They plan to use cash they already have on hand, along with some short-term borrowing from their commercial paper programs. Commercial paper is a way for companies to borrow money for a short period of time, like a temporary loan. There's a press release included as part of this filing, which probably contains more information about the tender offer. So what does all of this mean for CenterPoint Energy? Well, on the one hand, it is generally a good sign when a company tries to manage its debt. Debt can be like a weight holding a company back. By buying back some of their notes, they can reduce their interest payments in the long run, and that frees up cash for other things like investing in new projects, paying dividends, or even more debt reduction in the future. However, there are also some potential downsides. First, they are using cash on hand and short-term borrowing to fund this. This means that they might have less cash available for other investments or unexpected expenses. Second, the success of these tender offers depends on whether enough note holders actually want to sell their notes back to the company. If not enough people tender their notes, CenterPoint Energy might not be able to buy back as much debt as they want. Overall, this seems like a pretty standard debt management exercise. It is not something that is particularly worrying or necessarily exciting, but worth keeping an eye on for the company's long-term financial health. They are likely just trying to take advantage of current market conditions to reduce their debt load, hopefully positioning themselves for the future. Now my take, I think this is a pretty reasonable move. The company is clearly trying to be proactive in managing its debt, and that's generally a good thing. However, it's important to remember that debt reduction is just one piece of the puzzle. The company still needs to continue growing its revenues and profits to really succeed. There is always a risk as they are using available cash to do this. So we need to see where their priorities are. Is it growth or stability? If they had to decide between growth and stability, I would say the move suggests that they are valuing stability and are playing it safe. It's a good move, but not particularly exciting. I would say this is fairly neutral for the company overall. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more corporate deep dives.